Hey guys, welcome back to another episode of Market Mastery. There's a bit of interesting price action at the moment, so just wanted to do a quick update on possibilities of what might be happening in the markets this coming week. So on crypto, it's been a little bit more stale than the SP 500 and NASDAQ, but we'll take a look at those in a second. But over the weekend, it's actually been a long weekend here in the US. For Memorial Day, we had a really nice breakout here just after the weekly close, which, yes, closed red again. So we just broke the record again for the most consecutive weekly red weeks in a row. So I'm guessing that, we're probably not going to have 9 weeks in a row after, just breaking the record and making it 8 weeks. So I'm guessing that this is probably going to be a green week when we do get a bounce, but, never say never. Anyway, we have had, this structure ended up forming into a little bit more of a bullish structure. On the lower time frames, it was looking a bit worse, but on the daily, it just looks like a little bit of a falling wedge here with 3 bullish divergences getting put in here, right? It's really just one bullish divergence. It's the same divergence. It's just continued down, but on our indicator, it gives you the indication when the bull divs actually put in. And we had 3 drives down. So the first one, second one, third one here. And every time we dropped below 29K, there was somebody basically with an infinite bid underneath 29K that would just instantly buy whatever went below there. And I don't know if you guys remember, but back in 2001, I'll show you where it happened on the chart, but Sam Bankman-Fried basically came out and he said that he will buy any Bitcoin that's under 30K, I'm pretty sure. And it was just after that happened that we dipped down one more time underneath this 30K area, and the market just reversed and went straight up to the all-time high at 69K, right? So I don't know, maybe it was him in here under 29K that was just nonstop buying. I'm not sure if he said 30K or 29K. I was chatting to Rome about it the other day, and I'm pretty sure he said 29K. I'll have to go back and have a look at the tweet. But regardless, somebody has been showing up every single time we drop below 29K. And that happened here again. I put out a post just yesterday basically highlighting the bearish and bullish factors of this setup. So on the low time frame, we had basically the rejection of this level multiple times. It was looking like there was a possibility that this was just going to round off again. But the bulls obviously stepped in and we broke through this resistance of the symmetrical triangle shape, which is always a really good sign, because if this was going to sell off, it probably would have sold off when we broke down below this symmetrical triangle. But we deviated below the 29K level and reclaimed it and then pushed the upside. Now, I just want to show you something that I posted on Twitter the other day, which was this example here. So basically I said, if we are going to play bullish, this is what it's going to look like. And we're going to break below the lows. We didn't actually sweep this wick down here, so it wasn't as severe as that, but, we still got the same entry. So, we had that pretty nasty sell-off wick and then reclaimed this 29 range low. And then we pushed the upside and reclaimed this symmetrical triangle sort of bottom level, right? So that was really interesting that ended up playing out fairly closely to what I drew, just didn't come back down and sweep this low. It only swept all these ones through here, which is still a nice little SFP. And then we reclaimed here and now we've pushed the upside. So, I have to be looking at the market as bullish now. And I think the main reason why is because of what's been happening in the stock market. Now that can change pretty quickly because we haven't had a pullback yet on the stock market. So we have been talking about on Twitter and in the Discord groups and Facebook, everything like that over the last couple of days and last week about the potential for this breakout here of this downwards channel that we had been in 50 days, right? And so this is the chart here. So we had a really nice SFP here, right? Swept the lows and then reclaim, and also bouncing off the longer term channel support, right? And so what logic would sort of say after a sort of a move like this, you get the bullish divergence on the daily time frame as well. Decent chance it's going to break out of this tighter downtrend channel that we've been in for the last 50 days and head to the longer term downtrend channel. I'll show you that on the charts here on the higher time frame. right? So we've got the really nice setup here. So this is the downtrend through here. So we bounce off here, bounce off here, bounce off here, right? And then we got the bullish divergence through here. So this low had a swing high, come back, and then we put in the morning star reversal with the really nice SFP pin bar through here that swept through the major support resistance level from a previous high back in January 2021, right? So that made sense to me that this could be a potential bottom, and then we put in the pin bar, and then we got the reversal, and then chopped sideways into this downtrend on the lower time frame. Now I've had a pretty nice breakout. So we have to see what happens, because obviously the market is closed right now. The futures market is open, right? Still trading, but the volume is extremely low. It will kick back in tomorrow morning, 9:30 a.m. US time, when the market reopens. And as you can see, on our indicator here, it's telling us that we're quite in the overbought area, and we're ready for a swing low here on the 4-hour time frame. Now, I don't mean that's going to be a full swing low, because we've only got one dot here. Usually wait for the divergence, right? And we've only got the pivot put in so far. So usually when you're going to have, I think on this next move down, we'll probably get a bullish divergence. So when it finally tops out. So I think what might happen is we have a pullback into this level, or it might not go that deep. And then we come back up and get the bearish divergence, and then it rolls over from there. But I sort of feel that this could actually go a little bit higher than everybody is expecting, and it could push into the start of next month. Now, we also have to take into account that it's only a couple of days. So on June the 1st, which is Wednesday, so we'll have 1 day of trading, then June the 1st. That's when the balance sheet runoff, so actual quantitative tightening actually really starts. So just for reference, quantitative tightening was mentioned back in November, which is where the market sort of started its distribution range. So they sort of came out early-ish, mid to November. Bitcoin topped at that point then, and the stock market went into a really clear and obvious distribution range. Came back up, suckered everybody in that we were going to push higher and it wasn't going to matter. With this rally here, which is a lower time distribution, came back up. And obviously, that was the prime sell entry here for the bear market to begin, right? And so they mentioned QT back here. QT is going to actually start around here, right? So let's see what happens. We've had quite a big pullback, so there's potential that QT is already priced in. I don't know if it is 100% priced in. So there's a possibility that we continue pushing up for a little bit, and then the market really actually does start to feel the effects of QT, and then we have a rollover into over the rest of the summer into August, September, new lows. So I'm sort of expecting the possibility that stocks could do something like this. Pull up a little bit higher, come and retest this trend line, or at least come close to it, get rejected. I think that level there or that level there, right? So something like this could be a good level to short, or could be a nice level just to short the downtrend, right? So from the all-time high, could be a good level to short from there, here, or even underneath this. Pretty clear support resistance level through here as well, right? And then I would imagine that once this goes back into a downtrend, you get a little chop, like similar sort of throwbacks in here, and then we go down to make new lows. Now that either ends up in a really big capitulation back to the previous all-time high, which was the previous all-time high before the COVID dump. So this was the big COVID nuke that we had. And this is a pretty nice level here, which is one of the first peak after we broke through the previous all-time high. This is back in September 2020. So that could be a potential bottom level. We'll have to wait and see what we get. Or there's a final capitulation down to this level here. And I think that's when, towards the back of the year, like September, October, November, we start to get the Fed actually pivot back into more of okay, we're going to start talking about quantitative easing. We're going to start talking about growth and employment, rather than the whole entire focus of the Fed being on reducing inflation. Because at the moment, we've got a government which is hyper-focused on reducing inflation, because that's what everyone's pissed off about. And they're doing really badly in the polls, right? So they're putting pressure on the Fed to lower inflation. So I think I doubt that this would be the bottom the bottom, but there is potential. The other players that we go up and make a new all-time high and suck at everybody and really badly, and then crash and roll over from there. I know a few traders have mentioned that would be the most counter sentiment and counter trend sort of setup. And look, there is potential for that to happen, but I would expect it to get a rejection off this downtrend resistance line through here. Maybe if we break out of that, then we consider a sweep of the all-time highs and then roll over into a much longer bear market. But I would think that, to me, at the moment, this seems the most obvious. We come back to the previous all-time high around 3,400, and then we rally from there later in the year. I don't believe that the Fed is going to struggle with inflation until the middle of next year. I think it's going to start coming down a lot more rapidly than people think. If you look at things at the moment, like the amount of houses that were sold in the US, it was down from 750,000 to like 550 or 570,000. So there was quite a big drop off from month to month, just on only a couple of interest rate rises. Other important things to note as well, we do have FOMC, which is obviously there's probably going to be another 50-point basis rate hike again, and that's coming in. I'm pretty sure it's the 15th. So it should be Wednesday. That's July on the chart. That will be 15th of June. So that could line up pretty nicely, actually, here, if you've seen with my drawing, 15th of June could line up with a potential top in the market with another 50 basis point hike. Just, it could be completely random and it happens like that. Not 100%, promising that that's going to happen. But, there's a little bit of potential that it lines up like that. Now, back to Bitcoin. So if the market does continue to rally like that, I think Bitcoin does have potential to come back up to either one of these two major resistance levels, which is 35K or 38K, and do the same thing. And just, this is the downtrend resistance level through here. Let's just tighten up that line a little bit, right? The downtrend resistance level through here. And I would sort of imagine it's probably more likely going to come up to around the 38K mark. That would make the most, unless it's just like fakes out and dumps off, right? Which would be really nasty. But I mean, this range has just annihilated so many people. It's been a really nasty range with a lot of fake outs. So you can never, never say that anything isn't going to happen at the moment in this market, right? But what would make the most sense to me would be a rally up to here, maybe reject off there, one last final push into sort of this level here, and then roll over again from there into new lows. And that sort of probably would line up with the same direction the stock market is going in. And then that could bring us back to, the 200 daily moving average, which is hanging around that sort of 22 area. Maybe it comes down and bounces off that, or we come down into 20K, and I think there'll be a pretty strong bid down there, and that could be possibly our final low. If the final low with the stock market happens around this end of year time, I'd be expecting Bitcoin probably to return back into an uptrend. There's potential that, it rolls over and then we go through some sort of accumulation phase between 30 and 20K for a little while. That could make a lot of sense as well. But at the moment, just the way that markets generally move, they don't just go straight down forever. This could just end up playing out as a bear flag. So I need to be careful of that, which will probably end up doing something like this, sweeping this high and then going straight back down. So to protect our positions, I think that if we come back below this multi-touch level here, so we've had 1, 2, 3, 4, 5, or you could just say that's a 3-level touch through there if you want to count those two as one touch, right? Totally fair that this would be a 3-touch levels. Either way, it's a really solid level to be trading around, right? And so if you're taking a position here, or took our position down here, like trade setup suggested the other day, we could get the rally out here, right? Sweep this high through here. And then if we come back down after SFP and that, everybody gets suckered in, and then they start to panic once you come back below the level. I think once we come back below this level, a nice short entry off there, or you could just short it as soon as we get in there. The other option as well is a short through here after we deviate this high, but that might not happen. It could just blow straight through and push up into 38K, which is the main thing that I'm watching for and expecting, because I'd rather, catch this rally from, 29, 30K all the way up to 38 and then be looking to short and sell down here, right? Or up here, I should say. We could possibly though. If that trade doesn't play out, this is what I'm looking for. Basically, deviation of the high here at 3150 or 31,500, right? And then come back into this three touch level through here, right? So just deviation above two key levels, and then basically retest, bearish retest. That sometimes you don't get this bearish retest and just sell straight off. But I would not want to be holding any Bitcoin or any long positions after it comes back below this 30,500 level. I think if we come back below this level, especially after we sweep this here, it's probably going to mark down to 20K or at least 22K from there, I would think. And then you just watch out for, the next thing. Maybe it sweeps this low here and we stay in this range for a lot longer. So those are the sort of things that I'm always looking for entries. You look for those key major levels, in the range here, or the major downtrend here, or, this level through here, which is that 37, 36K level through there. And I'm watching to see how price reacts to that and see what the stock market is doing, right? At the same time. The concerning part is that when we did have this big breakout on the stock market, which I thought was quite obvious, it was coming. It was a big counter trend rally. Almost everybody was expecting it to roll over and just continue its nuke to the downside. But I thought it was quite obvious that this was going to get a rally. I didn't expect Bitcoin to have a rollover and nuke and then follow over the weekend. That has been some pretty random price action, in my opinion. So yeah, the market's definitely quite strange at the moment. I thought it would continue to follow the S&P 500. So it's going to be interesting to see what happens in this coming week. If the crypto has a really bad dump when the S&P 500 has a pullback, or if the S&P 500 has a bit of a pullback and crypto stays strong, and then the next time S&P 500 and Nasdaq rally, crypto pushes up to its next bearish retest level before the next rollover. So with Ethereum, very similar sort of structure and setup. We had this bullish divergence through here, right, and then it continued, and we had one more rollover. So the bottom got put in. So first dip, second dip, third dip, right, and then we have that daily bull div. So watching it at the moment to break through this trend line. It's coming up to the resistance at the moment, bearish retest here. So that still needs to break out. I think the most obvious level for this to come back up to, and might chop around for a little bit before it gets there, would this be around this 2,500 mark. So I think definitely has potential to get a rally through here and then roll over from there. And it's sort of like similar price action to what we saw here and here, a rally up into the nearest resistance level, right? And then once you get below that, it's going to be looking pretty ugly. So wouldn't be surprised if on Ethereum, if we go back and look at its previous market cycle, this isn't the best because Binance doesn't have before 2017, but let me just quickly have a look. Is this Bitfinex? Yeah. Quickly have a look at the Bitfinex chart. Right. So on the Bitfinex chart, you can see sort of similar price action to what's currently playing out at the moment. So we had this sideways chop for a little bit and then a really big pump. And that looks actually quite similar to the Solana price action as well. So we had the pullback, and I sort of feel at the moment in Ethereum, we're sort of sitting around maybe this area here, come back to this level. So either that or we're back down here and we have one more rally and then we just roll over from there and then chops sideways for, this was a long time, probably too long. I don't think it'll stay down for 700 days this time, just because of more adoption. But we'll have to see how that ends up playing out. But I sort of feel like with Ethereum at the moment, we're back to these major lows through here. And we could be just getting one final rally through here into this level here, roll over, and then, we go back into either below the previous all-time high or bounce off it, right? And we go through a long accumulation period before the next cycle starts and we go into the next halving. So that would make a lot of sense to me. So I'm watching out for potential for something like that on Ethereum, but at the moment it doesn't look strong. I think there might be really good shorting opportunities when it comes back up to the previous resistance level through here. So maybe around this 2,400 level might make a bit of sense. Maybe with like a deviation. So I usually wait for deviation above and then come back below. Then you want to get in there. Okay, hopefully that makes sense. That's pretty much what I'm looking for at the moment in the markets for this upcoming week. We'll quickly take a look at the NASDAQ. It's pretty much doing exactly the same thing as S&P 500. And one of the other things I used to, I posted about this fair bit on Twitter and Discourse and Facebook, but I know some people follow us on YouTube that don't follow us there. But one of the things that helped me pick this bottom in the tech stocks and the S&P 500, we see pretty nice level through here, but it did go fairly deep into it. It wasn't as clean as the level on S&P 500, but let's go and have a look at some of the major stocks. So Microsoft was at major support from, over a year ago, right? So I thought Microsoft really needed to bounce here. Tesla was probably the only one that wasn't at a really, really obvious level, but it still was at a pretty clean level as well. The next cleanest level for Tesla probably was down here, and I didn't think it was going to make it all the way down there. That might be the next level that it gets a bounce from. If we look at Amazon, right, this was at a really super obvious high time frame level, right? And we look at Apple, was it quite an extremely obvious? So this is the first rally that it had when it went absolutely bananas after the COVID dump in 2020, right? So it was the peak of the COVID rally after winning a 170% run, right? That's going to be a really important rally. And we can see it took almost, 6 months to a year to break out of that, almost a year, 300 days to break out of it, flipped into support, right? So that to me was a pretty obvious level, right? Deviated below that level and reclaimed and then pushed. So you had Apple, Amazon, and Microsoft, which actually makes up for about 28.7% of the NASDAQ, right? And there's quite a large percentage as well of the S&P 500. So I was looking at that, and I was looking at the setup that we got as well on SP 500, and I thought, okay, everything's adding up for us to get a rally here, and so far it's paid off pretty nicely. But unfortunately with cryptos, they're lagging a little bit. But we definitely nailed the SP 500 move when pretty much everybody was expecting it to continue to capitulate, and bearishness was at an all-time high. Now, if we just get crypto to follow this week, that would be really nice. So the other potential as well, if this does roll over after just breaking above this here, potential is come back through here, and then we get the rally as this pulls back. That's one thing I'll be looking for, that sort of action here, while Bitcoin has a pullback to retest this trend line here that was, the last 2 weeks has been resistance, comes back and retests that, and then rallies on from there to test that 36, 38K sort of level. So that's the main thing that I'm sort of looking at the moment. When we have these rallies, unless it just completely rolls over and nukes from here, you guys know what to do. If we do have these rallies and come back up to these key resistance levels, I'll do another video and we can discuss the potential and what to look for. But mainly it'll be stuff like this, right? The easiest short's a deviation above key levels, and then you short it once it reclaims that, because it should hold as support and then continue on higher. And if it doesn't, it means the market is bearish, and you want to be trading with the bigger players in the market, not the retail traders that are getting suckered into buying a rally late. And we're trading with the big whales, the big institutions that are knocking the rally on the head and pushing it back down for new lows. So that's pretty much it, guys. Thanks a lot for tuning in. We'll see you all in the next episode.